Let's get to some movers now. We've got a mixed picture for TJX, the parent company of Marshalls, TJ Maxx, and Home Goods. Reported a revenue miss in the latest quarter, but full-year guidance also fell short of estimates despite an earnings per share beat. The company adding to the shrinking inventory narrative, seeing inventory drop 5% from last quarter, although that's not necessarily the same kind of shrink when retailers talk about theft. That's usually what they mean when they talk about shrink in those terms. In any case, you see there what the numbers look like for the quarter here. But I think it's interesting that here, unlike a Target, the company is coming out with an increased forecast for the full year.
Yeah, a lot harder to five-finger discount a sofa out of Home Goods than it is toothpaste out of TJ Maxx or Target for that matter. But at the end of the day, I mean, Home Goods, since I mentioned that off the top here, first quarter, those comp store sales were actually down by about 7% here. And you think about some of the categories that have continued to face headwinds. It is the home category combined with some of the apparel and electronics. But for a company that dabbles in at least two of those three elements in a more outsized way, TJ Maxx certainly one of them here. Overall comp store sales, though, they did increase by about 3%. That is at the higher end of the company's plan and driven by an increase in customer traffic, they're noting here. So as consumers are changing how they comparison shop, we've seen that show up in how they shop based on the retail sales data that came out earlier this week. Even if digital sales were looking stronger in that report versus what we had seen in Target's specific numbers, it's a broader question of where for the in-store capacity they might be doing some comparison shopping as well. And typically TJ Maxx and some of the companies that are underneath of that umbrella give them that opportunity to, at least on price, comparison shop.
Right, and TJX had also been the beneficiary of some of the inventory overruns at other companies, right? It takes that inventory off their hands and sells it. So it'll be interesting to see now that you have a little bit of an inventory normalization in the channel if there is less product that is coming TJX's way. One more note, and I'm going to have to listen to the earnings call, which I think is ongoing for the company. There was some question over whether it might benefit from the bankruptcy of Bed Bath & Beyond. So, are they able to take share in that environment? So we'll have to check that out and see if that's what's going to happen.
I'm on the lookout for some Gucci flip-flops over at TJ Maxx. So if you see any, just flag them to me, folks.